Hello everyone, today is Friday, June 11th, 2021. My name is Evan. Welcome back to our weekly stock market analysis videos. If this is your first time tuning in, thanks for joining us. Thanks for tuning in. Here's how these videos work. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets. We look at things like credit markets and volatility and sector performance, market internals, correlations, and pick apart all of the things that stand out, look interesting, look different. And then in part two, we look at the trends of the market. We jump into the charts. We try and make some sense from all of the data from part one and try and best position ourselves looking ahead. So hopefully that sounds good to you. Hopefully you're in the right place. Let's jump into some of the headlines from this week. Now, the first and sort of most important in my eyes is the Russell 2000 getting back into gear here. It had a strong week, strong rally on the week, and it is back to the top end of its range. If you have been following our videos for the past, call it 2 months or so, we've essentially been disregarding the Russell. It's been in this large, choppy range, mostly in the middle of it, and we basically have been saying needs time, not at an interesting spot yet. Now it's starting to get to an interesting spot, and I think this is why we have these videos. This is why we measure and map the market sort of every week, is to pay attention to when things start to look a little different or start to get at some important points. I think the Russell is getting there. It's not there yet, but we're going to talk about that mostly in part two. VIX trading down to 1-year lows. So we got as low as 15 and change for the VIX this week. That's good for 1-year lows. We're going to talk about that. And we see commodities continuing to trend higher, which is not a new trend. It is an existing trend, but natural gas, oil, and some of the other commodities out there continue to do well in this market environment. So let's jump into some of the numbers now. Let's take a look at equity market performance. This right-hand column here, you can see is the 1-week returns. Dow Jones stands out here as a negative 0.8% week. Everything else was in the green. S&P 500 marginally so. The Nasdaq and the Russell 2000 here, they were the standouts. That's technology, that's small cap, that's growth. It's, well, mostly value as well. It's kind of both working on that front. And both of those had some good performance. You can see world stocks didn't do a whole lot this week either, kind of flat on the week. If you look at the 1 month numbers now, you can see the Dow Jones is starting to slow down a little bit, not quite keeping pace with the rest of the major indices. If we take a look at market internals, it was a very strong week for market internals. That makes sense. Generally speaking, when the Russell 2000 is strong, when small caps are strong, you're going to see stronger numbers out of market breadth and market internals. We had 1,564 net 52-week highs made this week. That's a very impressive, healthy number. We also had 2,374 stocks advancing on the week, cumulative basis over the 5 days. So we had a net rise in stocks, net number of stocks hitting 52-week highs. You can see the percentage of stocks in the S&P 500 over 20 SMA, only around 58%. That number is actually a little bit more shallow than I would have thought. If we look at the 52-week highs minus lows, again, this is our sort of summed up view here over the last 30 days. You can see this trend still extends here up and to the right. In fact, it's starting to accelerate once again up and to the right. That is a healthy market. That shows that there is risk appetite right now. It still means you got to pick the sectors. You got to be where the movement is happening. But that shows, generally speaking here, there is still a bid in the equity market. It's not something I would advise fighting for very long. Obviously, you know, we can always have a 2, 5, 7% correction in the market, but a, underpinning of market health is still kind of shown here in this chart, and I wouldn't want to be necessarily fighting that until and if it changes. If we look at sector performance on the week here, we had real estate at the top of the list, up 2% on the week. We had healthcare in the second spot, basically up 2%, and then technology, 1.38% to the upside. Those were our market outperformers. We had 5 sectors in the red. Financials were down 2.39%, materials down 2%, and industrials down 1.75%. So we had a pretty kind of split week here. We had some things down 2%. We had some sectors up 2%. So it was definitely a split market, and depending on where you were invested this week would certainly have dictated how you're feeling going into the weekend. So it was a little bit of a split market. Again, most things were on the rise, but generally speaking, we had a little bit of mixed here in financials and materials, industrials specifically. That shows that Dow Jones underperformance that we saw this week. If we take a look at correlations, so, the same kind of, themes that we've been seeing here these past few weeks are basically still at play here. Maybe they weakened just slightly. So essentially the two tight correlations that we were tracking over the past couple of weeks was this row right here. So this percent TNX, that's the 10-year yield. You can see these negative 0.85, negative 0.92 correlations. If you look up here, that's to the Nasdaq and the S&P 500. What that's basically saying is as yields go down, stocks go up. As yields go up, stocks go down, at least as it relates to this 10-day correlation, particularly with the Nasdaq is the strongest. So we're getting the bond market rallying, which is good for the Nasdaq. You're getting bonds rallying, you're getting the Nasdaq rallying, and that is continuing to stay as a pretty tight correlation. We're also continuing to monitor this USO correlation. So this is oil. We know oil has been, and energy has been a leadership sort of sector here. You can see those correlations are pretty tight now for the S&P, Dow, and Russell. Certainly dropped off a bit there on the Dow Jones. Those are about the two standouts there, nothing new, and we've been sort of talking about those these past few weeks. If we take a look at volatility, you can see volatility coming down this week, so 15.62. That is a nice and low reading, back to normal territory. It's been a long time since we've seen the VIX down here at these levels. We have been at very elevated levels for basically all of the past 14 months or so, and so getting a VIX back down around 15.62 is much more, reminiscent of normal times. We're seeing the curve, the term structure is still pretty steep here from the front to the third month, but all things considered here, I mean, it's still, heading lower in the right direction if you are bullish on this market. If we take a look at interest rates and credit, so we saw yields falling this week across the curve, so that means bond prices are rising. We also saw some good action out of investment grade bonds, LQD, and high yield JNK, both of those rallying on the week. And again, when we looked at those correlations, that is what we're seeing is good for the market right now as yields come off. Dollar and commodities. So we saw the dollar rise this week. So it looks like it's trying to make a stand here at sort of its year-to-date lows. It was up this week. Gold was down, but basically everything else was still up in commodity land. So we saw silver up. Bitcoin was up 4.18%. Some interesting news out there this week with El Salvador and, sort of legalizing that or making that a, merchant sort of mandatory acceptance over there and giving it sort of currency status is pretty wild. So that was up on the week, probably that among some other things. DBA up on the week as well, agriculture ETF, crude oil, USO up on the week. Natural gas was up pretty big here on the week as well, 6%. That's starting to perk up. I actually do want to ask a question here on Bitcoin and just crypto in general. How many of you are interested in crypto analysis from me, from this channel, from the Trade Risk? Are you interested in sort of a crypto-centric, crypto-specific series that would come out on a weekly basis, maybe beyond just prices? We'll do it sort of like we do here, where we have some more kind of macro maybe analysis here, looking at the data side of things and then looking at the charts. Is there interest in that? Leave a comment below. I'd love to know if you're trading crypto, if you've got an interest there, if you want to see more content around that ecosystem specifically. Leave a comment below. I'd love to know if that's the case. Report card for this week. It was mostly positive check marks across the board. We had a little bit of some mixed turbulent signals there in the risk sectors outperforming, but all in all, we got an A- for this week. We saw pretty solid marks, all things considered. When we look at our two trading systems, so this is how I'm personally invested. We show this every single month. I'm sorry, every single week we show this. And in fact, we post performance every single month. So if you want to see May's performance just got posted to the blog. We post the actual trades, so the symbols that we traded, when we show the net performance every week as well for these trading systems. You can find them at thetraderisk.com. But Merlin up here, still kind of, I'll call it old, boring, old fashioned, right? It's still 100% invested in this market. It seems like that's basically what I've been saying all year long. And it's kind of what it has been for most of all this year. We've been, sort of rotating or balancing around somewhere between 80 to 100% invested, and it just continues to stay invested in this market and participate in these long-term trends. Lamerick here is a little more interesting, and actually, when we look at it now, so it's 40% net long. Notice it's got 11 positions on though, so it's actually got a basket right now of longs and shorts. The max number of positions it'll hold is 12, so it's actually almost fully invested right now, but that is a blend of shorts and longs. So it is sort of taking a stance here. It has been actively trading, starting to come alive on some of this recent market action. So it'll be interesting to see how this shakes out next week. That's the way we're positioned. If you want to learn more about these trading systems, or if you want to get signals from these trading systems, you can click that link appearing in the top right of your screen. With that, we'll be back here in just a moment with part 2. We're back. We've got TC2000 open. We've got our equity market grid showing here. So we've got the S&P in the top left, Nasdaq top right, Russell in the bottom left, ACWX, which is international stocks, in the bottom right. Price itself, the white dashed lines you see on all these charts, and the multicolored dots are a custom smart trend filter that we've built for TC2000. It measures price and volume, helps us determine trend and trend strength across different time frames. So if we take a look here at a weekly view of all of these markets, you can see most of the same that we've been looking at here, mostly uptrends, except for the Russell 2000. We see it actually getting an upgrade in our outlook this week. We're seeing a green dot printed there after a series of yellow dots that shows that trend strength has been picking up here in the Russell 2000. And that was one of the core themes from the top of our video here, some of that Russell strength. We're going to talk about that more in just a moment. Everything else here is still in a healthy uptrend on the weekly time frame. Let's go down to a daily chart. Let's look at things a little bit tighter here. And once again, we have this unanimous vote of market breadth, market confidence, market strength to the upside. We're getting green signals across the board here in the S&P, Nasdaq, ACWX, and IWM. And that goes to show that we're getting sort of trend alignment on the daily chart and on the weekly chart. Both of these, or all of these markets, basically were essentially green. I guess maybe the S&P 500, it went into the weekend last week yellow, and it did start off this week in the green. So we basically got that flipping up, and then I think everything else was already green from last week. So that is the trend analysis. Let's take a look at some of the candlestick analysis. Let's get a little bit tighter here in our market view and sort of the way we're sort of framing things out here. So when we look at the S&P 500, it's a busy chart. I think this is the one that we have more recently adopted just because it's a little simpler. This is the trading range that we've been looking at. This is the landscape that we've been trading in for the past 2 months or so, and it's been very, very sideways and sort of choppy in the S&P 500. In last week's analysis, we made a note of remember it was the holiday shortened week last week, but we made note of this breakdown here. So we had this this period in here, which we identified as sort of a weak or a weak looking set of candlesticks, a series of candlesticks that were lining up here. And that led to this single day shakeout that the sellers in my book here should have been able to, capitalize on this, break us down. And if we were really weak in the market, we would have sort of rolled over from this point. But we didn't get that. We got this big sort of wick on the bottom. We saw price close well off of the lows. And then we got this strong follow through day to the upside here on Friday. And that to us last Friday was basically a day to take notice to say, look, buyers stepped in, they supported this market. We couldn't break down. It's time to change gears. Maybe not get too excited until we break out to all-time highs, but it's time to flip gears here and get more bullish or neutral to bullish on the market after this follow-through day on Friday. Well, this week we chopped around quite a bit. Monday, Tuesday, Wednesday, all went absolutely nowhere here in the S&P 500, bunch of overlapping days. Thursday was the breakout to the upside. Friday, we saw a slight continuation to the upside, but pretty much an inside session. It was good for new 52-week closing highs, though, and we are holding above 42.34. So the way I'm looking at this market now, again, is just still glass half full, breaking out to new highs. We've got no overhead supply here. And as long as we are over, certainly, 42.34, which is just below us. I mean, it's in today's range, but I guess you could argue in the very, very short term, if you want to keep just an extremely tight lid on this market, you could use around 42.15 or so. This is essentially the lows of this trading range from this week, where we sort of carved out and put some time going sideways. As long as we're holding above here, I mean, that's your point of exit in the short term if you want to take some extra risk on this market, or if you want to participate in the long side. If you're holding over that, then life looks good for the bulls. If we start reversing, if we break down, if we see some high volume rejection of new highs up here coming into next week, then all bets are off. Then we'll start to change our analysis, our outlook, and what we think about this market. But until and if that happens, buyers are in control. Market breadth supports it in some of the data points we looked at earlier in this video. So right down the list, you can see all of the backdrop and sort of intermarket relationships are sort of lining up on the bull side right now. And so we want to respect that, and we want to participate in that until things change. So that is the analysis right now. There's no overhead supply. So until this breakout, and if this breakout rejects, we're going to go with it, and path of least resistance is higher. The Russell 2000, like I say, is the big kind of interesting one here, because this is the pattern that's been at play now for the Russell 2000. You could basically say all of this year, this has been going sideways and doing nothing. And it seems like every Friday, this price just ended somewhere in the middle of this range, where we would basically say, well, there's really not much to do. It's not doing a whole lot wrong. It's not doing a whole lot right. It's just digesting and going sideways. Well, now we have price that is escaping to the upside here, and it's back to the top end of this range. So now is the time to start to pay attention to the Russell again, because after 5 months of doing nothing, it might be ready to start to lead again and break out to the upside. Now, it's had a pretty good run. It's back up to resistance, so we don't want to get too excited just yet. But I do want to start to pay attention to it now, and this is where moves can happen pretty quick, and you can miss things, in a snap of a finger. So let's pay attention to the Russell up here. I'd say 234 is basically the magical number. If we start closing above 234, or I guess you could use 234.42, which would be, more or less the exact highs up here. That's the level to pay attention to see if that Russell 2000 can start to break out to the upside. So that's what I'm watching. I've got the, it's got my attention back up here at new high, towards the highs, and that's what I'd be paying attention to, is that breakout. Last but not least, if we look at the Nasdaq 100, you can see this is starting to break out here. I don't think it officially got a new 52-week high, but it is darn close. You can see it is cutting through it's breaking above the February pivot high, and it's breaking above sort of the midpoint of this range. So to me, it looks like the cues are ready to run here. Again, we still want to see a little more proof maybe, but it looks pretty good to me. And this, again, looks like all markets trying to break out. So when all things line up, though, again, I just still, as exciting or, as maybe one way bullish as I sound right now, and I am, I just want to make sure that we are still paying attention to risk. So when we look at something like the VIX, which is now down to 15 or so, this has come, pretty far in a, short amount of time. It is back towards these lows down here. So again, we want to be aware that we could easily get a rug pull up here to jolt us down, 1 or 2%, keep everybody honest, and, shake out maybe some weak hands before the real breakout comes. That's all sort of, potential in there. So let's keep an open mind. But generally speaking here, I like what I'm seeing from price action overall. So that's it. That is the full sort of market roundup. We talked about the VIX a little bit. I wanted to talk about, before we get into some sectors and industries, I want to talk about silver, which is at an interesting spot as well. So we've been watching silver now. Look at the past 4 weeks or so. It is bumping its head up against this 26.25, 26.30 area. This has essentially been the highs for it for the past, certainly the past few weeks, but even going all the way back to 2020, this has essentially been the high for silver. And you can see that's still the case right now. And so we should be watching again for this, for a potential breakout here. It needs to get over this 26.30 area to potentially start running. So I think that's at an interesting spot. Let's keep it on our watch list. Now let's move into, actually, let's touch on natural gas. We haven't looked at natural gas in a while. Natural gas is, is a pretty interesting instrument to trade. It is pretty choppy and it's much more volatile than lots of other commodities, but it is starting to act pretty reasonably again. It has been in a, very long-term downtrend, and there's been a lot of volatility here, but we put some heavy volume in on Friday. We're back over 1130, which is the February highs. So we're at year-to-date highs now for natural gas, which is exciting. But, remember, commodities, generally speaking, have been running and trending and moving to the upside now for many, many months. Natural gas didn't get that memo. It is catching up maybe late. And so maybe there's a catch-up trade in here where natural gas can really just start to accelerate to the upside. It's certainly possible. So let's keep it on the watch list. We got a nice gap up today, got some heavy volume, clearing to new year-to-date highs. Natural gas certainly got some momentum in its back. All right, now let's get into some sectors. So we've got a couple of scans built out here that identify some strong sectors and some weak sectors. So let's just run through them pretty quick here. We're going to start with the bullish signals that we have. The first is biotech. So biotech here, you can see healthcare, biotech specifically. You could look at something like an XBI or an IBB as well, all of which had great weeks this week. And full disclosure, we are long LABU. So LABU is the 3X ETF that was up 21% this week. We did scale some profits earlier in the week, but we still have some positions there in our Merlin trading system. But this biotech here coming alive, which is nice to see. Let's go back to our chart over here. Healthcare, number 2 here, you can see healthcare. This is a nice signal here as this has been sort of basing out, pulling back, going sideways, and now starting to lift up again. So you get sort of a new multi-month close for healthcare. Software breaking out to new highs here. So software infrastructure now breaking out to new 52-week highs. We've got the technology sector, internet content and information starting to move up towards new recent multi-month highs as well. We see steel breaking out. So we're getting a big mix of sectors and industries that are working. Another IT space, more on the healthcare side. Real estate. So here's a REIT, hotel and motels industry that is moving to the upside. Lodging, starting to, not so much a new high, but take a look at the volume that came in. So this scan is kind of multi-dimensional. It's looking at heavy volume. It's looking at good closes. It's looking at some price structure. So this one I think is mostly keying off of the volume there. Shipping and ports, breaking out to new highs after a multi-week consolidation. Health information services, starting to break towards new highs. Real estate again, heavy volume coming in. Healthcare facilities breaking out. Advertising in here as well. Utilities, I'm going to start to go pretty quick. Financial data, let's see, medical, airports as well. Utilities moving. Lots of things kind of breaking out this week, and it's pretty diverse. A lot of healthcare and tech. Data storage here as well. Let's see, data storage is hitting, I think, just this heavier volume sort of reversal week. So this is an interesting one. This one's been getting hit. We talked about this actually on the underperformer list for a couple of weeks. Got a little bit of a turnaround going on here this week, up 7%. Let's take a look at some of the things that didn't work so well this week. So here is farm and heavy construction machinery. Take a look at the heavy volume coming in and the breakdown here in this particular group. We've got So healthcare, this is where industries matter. So this is the healthcare plans industry. You can see starting to see some heavy volume and break down a little bit. Insurance, still pretty weak. Lumber and wood continues to pull back. I know in the commodity side there, lumber prices are coming back down. Recreational vehicles selling off here, heavier volume. Residential construction, you can see again selling off here with some more volume. And last but not least is trucking, industrial side. So this is all industrial. We saw it in the sectors on the first part of this video. We see it in the Dow Jones. That was the weakest part of this market, and you're seeing it even all the way down to the very specific industry level, like some of these plays in here. So that's what I got for this week's market analysis video. Hopefully you found this helpful and useful and interesting. Leave a comment below. Let me know what you're looking at going into next week. What stands out to you? Anything I missed, please leave a comment below. And I'd also love to know, again, if you are interested in some of that crypto analysis, to let me know below if that's something that you're looking for, or if you've already got just plenty of that and you're not that interested, or you're already seeing it elsewhere. Then, let me know below. So that's it. Enjoy the weekend. Thanks for tuning in. Don't forget to subscribe to our YouTube channel if you like this content, want to stay up to date, or you can always catch it on thetraderisk.com. Have a great weekend. We'll see you back here next week.